All right, this is Bruce for FXCoinz taking a look at the oil market, both crude and both Brent and WTI from a technical perspective. So starting with Brent here, and both patterns and the assets have similar patterns. There's a long-term corrective decline that takes the form of a falling bullish wedge and a sharp breakout at the beginning of March. So this is Brent on the weekly, and I'll go to the daily after, and this is WTI on the weekly as well. So you see the falling bullish wedge here, the breakout, sharp breakout, similar characteristics, similar overall patterning with some different variations when you go into the minutia. But if we go back to Brent here, you can see that the retracement completed a 78.6% Fibonacci retracement with this low of 70.90. And that corresponds with prior resistance of the downtrend and of the wedge pattern becoming support. So resistance becomes support at the 78.6% Fibonacci retracement, a higher probability support zone if there are signs of a reversal. So we do have a bullish weekly reversal that triggered this week and a rally above last week's high. And you can see that since the decline accelerated after the breakdown from the consolidation pattern, we had a sharp decline. And this was really the first signs of any type of bullishness and at a higher probability long-term support zone. So if we get a weekly close above last week's high on Brent 75.71, on WTI above 72.37, then the chance of continued strengthening, I think, improves. Regardless, though, there are indications that this is potentially a longer-term bottom. Now, given the recent volatility, I wouldn't be surprised to see a sharper response to a reversal off these lows once it gets going. Switching to the daily chart, you can see that the first bounce found resistance around the 200-day simple moving average, even though the high was a little bit above there, 76.61 on WTI. The close was at resistance, and then the next day we see a lower daily high and lower daily close and a pullback into the support zone. I think this is going to be an area where investors will accumulate either for further consolidation or for a sharper rally that might precede this minor pullback here. Key initial targets on WTI are 79.23, the lower swing high here, the higher swing low here at 81.94, and then the falling 50 moving average currently at 87.81, but falling, of course. So that is going to be key dynamic resistance, especially since it was confirmed here after the first decline. There was a first pullback. Going to Brent on the daily, we see similar characteristics. Different prices. So we've already hit this first resistance zone. Also on the WTI that occurred as well. This is the first pullback after the sharp, the peak. There was a sharp pullback, and that first pullback low was tested as resistance on this recent rally, along with the 200-day simple moving average on WTI and then also on Brent. So the 200-day simple moving average on both is key. A breakout above that and a sustained support around those moving averages is going to set the stage for a continuation of the rally up into higher targets. So continue with the Brent targets. The lower swing high here is first at 82.57. This higher swing low here at 87.16, and then the falling 50 moving average now at 92.36. And of course it's falling, and interestingly enough, the 38.2% Fibonacci retracement of this full decline is still way up here at 89.88, and it's certainly possible that the 50 might get closer to it before it is reached by price, if it is reached by price, and that would strengthen that area as a target, but also as a resistance zone. On WTI, a similar situation, but the 50 is getting closer to 38.2% retracement of the decline a little bit quicker. So in both cases, we're watching for a rally back above the 200 moving average and then above what is now a lower swing high to confirm a bullish reversal of the short-term trend. All right, that is it for oil traders. Have a great week.